Welcome back to class. In the previous section, we looked at how to create an invoice and how to track open invoices, and in this section we are going to look at how to receive payment against those invoices. Now, this is a mistake a lot of people make because when you see receipt on QuickBooks, receipts, create sales receipt on QuickBooks, actually it is all entails payments, but you don't treat payments of cash payments and credit payment the same way, even though all of them are income to the business, but you don't treat them the same way in QuickBooks. What does that mean? Now, it means that if a customer walk into your shop and make purchases and you receive cash immediately, of course not everybody that enters your shop is going to be extended a credit or is going to be granted credit, of course. So some people will come with their cash and they'll get what they want and they'll move, or they'll come to your restaurants and buy whatever they want to buy and they'll move, and of course they'll pay you. So that is when you're going to use this create sales receipt. And when you are using create sales receipt, except for a customer who has been in a long business relationship with you, when you are using sales receipt, there is a separate customer account used in tracking those. I think I have made mention of that when we were creating our customer database. So if you look at it, you see that we have an account called Sundry General and One-Time Customer Account. This is very, very important. Why do I use? You can choose to use one. I choose to use the names. I choose to use the whole name because I want to show you that the customer must not be in your database before you can sell to him. So you can see the customer must not be in your database because you can sell to him. So there is a room for every customer that walks into your office, walks into your shop, walks into your supermarket, walks into whatever premises of your business, whatever type of business you're doing, and wants to patronize you. So you can capture the transaction immediately. So that is why we have this. You can choose. Some people use sundry account. I have seen supermarkets that use sundry account. I have seen businesses that use sundry account. I see people that use general sales. That means these are accounts that you don't need to have the customer database. That means you don't extend credit to this customer. That is what it means. Because if you don't have the database of that customer, you don't know where the customer operates his business, you don't have any business to have his particulars. Because it may be a one-time or a consumer of that product. That's somebody that buy to consume immediately. He doesn't have need to own the shop or to own an outlet where he buy and resell. So that doesn't matter. But this is how we do it. So you have this. So basically, every transaction that has to do with sales transaction or cash sales transaction enters this kind of account. That is one thing you should be aware of. Enter this kind of account. Now, but when it's a credit transaction, that means we know the customer, we know his place of business or her place of business. So we extend this credit with the assurance that the customer is going to pay later. So when the customer now pay us, of course, we don't go back to say create sales receipt. No, we don't do that. There's another button here called receive payment. Now, what does this receive payment do? So you see, if you look at the definition, that is record a payment you have received from a customer against an invoice or billing statement. That is what you use receive payment. Now, if you look at this one too, you can say bill your customer and receive the payment at the same time. So these are two different payment method, but all of them is still receive money. All of them does the same thing, but they are applied on different forms of transaction. The other one pays immediately, the other one pays later. So this one is a payment receipt. This one is the payment the customer have made. So you're going to receive that payment through the receive payment button. If you don't see it here, if you don't see this here, now you can come to your customers. When you come to customers, you can now look for where you see receive payments. Now when you receive this, when you click on receive payments, you see a form like this dialog box like this, make sure you look around and see if there's anything you need to uncheck, if there's anything you need to just, like under this print payments, you can decide to print it, you can decide to email it to the person as a receipt that okay, you have received his payment. All right, so let's look for the customer that have paid. Okay, this is the customer we have overdue invoice for. So this customer, let's say this customer paid, he did not pay everything. This customer paid, let's say paid 100. Now you can see that this is QUICKBOOKS calculator. Now automatically calculate payment. If you do not enter an amount received, QUICKBOOKS automatically calculates the amount as you select each invoice in the table. So that is, if you do not enter the amount paid and you just checked here, QUICKBOOKS automatically assume that this customer has already paid in full. So that is what this box is trying to tell us. So if that is it, you can just say okay, yes, let's go ahead, click yes, and just ignore it. And because this customer paid part of his money, so we now record this is the amount he paid. And you can see that the once that is done, once the amount is entered, you can see we will have the amount due is this and the applied amount is this. Now let me use this opportunity also to do this. Now when it comes to recording payment, or when you are extending a credit facility or a discount to a customer, because you may say okay, to encourage the customer to pay faster or to pay quick, you can say okay, if you pay within this day to this day, you have a 10% discount, or you have a so amount discount. So QUICKBOOKS does not have specifically this is for discount, this is for this. But when you want to apply the payment, if the customer paid within the specified range or within the specified date, what you need to do once you are receiving a payment, now look at under this place. Now under payment, you can see that the total amount that the customer is owing is 187,587, but he paid 100. So we have unfinished, we have this balance as underpayment. So you can choose to leave as an underpayment, or you write it off. Now writing it off means that you are extending discount. That is what it means. So it means that you are recording it as a discount. We're still going to talk about discounts, but I just want to highlight, I just want to point it out right here, that this place, now you can choose to leave it as, write it off as a discount, or you leave it as another payment. So we're going to leave this one as another payment. Then we are now going to go back to our invoice, the one we created, and check something. I will show you something. So once you enter the amount like this, and you now choose the mode of payment. How did the customer pay? You say direct transfer. Let's say it's a direct transfer. You can choose to that, or let's say he paid cash, or he issued you check. So any payment method he used, you just indicate that. So once that is done, we can just say click and close, or click and new if you want to apply another, if you want to record another payment. So let's say save. We can save. Let's go ahead. Okay, let's go back to our invoice. I want to show you something quickly so that we apply that invoice rate, that discount rate in our next invoice. So come to your customer. You can choose to come to customer here. Now look for the customer. Okay, these are the customer we just created, right? So the transaction between us will show, this is the invoice. So this invoice, now let's look at it. Now let's look at it. We have the dates. Now from the date of the invoice to this day, this is going to be the ship date. Let's say the time. Our term of agreement is, if the customer paid us within 10 to 30 days, let's say we should giving him 10%, or we're giving him 1%. Or let's say net 30. If the customer paid then 10 to 30 days, we are giving him the time of the agreement is net 30. That's, you cannot go beyond this. Or let's say 15. Or we can say due on receipt. So let's use due on receipt because that's the most popular one, due on receipt. So once that is done, we can say okay, save. Yeah, you are saving changes. Yes. So when we do that, let's say we are receiving payment again. So we are receiving payment from that person that's gotten. Now this customer is paying us immediately, and because we want to encourage him to be paying more, to be paying us as he just did, what we need to do is let's say this is what he's supposed to pay. Let's say we are going to say he paid, because he's paying immediately, we are going to collect 45,000 from him. 45,000. That means the other 3,000 should be a discount. That's what I want us to see. So the other 3,000 he paid through check or to pay through direct transfer. I enter this payment method, so I can choose to edit. I can choose to enter any kind of payment method I want. I enter this myself. So if you want to enter a new payment method, you can just click add new payment method. So this is the one I entered, so you can just click on it. Now this 3,000 naira, we want to write it off as discount. So when we are doing that, we just come here and say write off the extra amount as discount. The total amount he's supposed to pay is this, but what we receive is this. So we are writing off the balance as a discount. So when you do that, you click save and close or save and new. It will give you another option to track your discount. So now this is another thing, write off amount. So the write off amount is this. So where are we writing it off to? Now because it's gonna be an expense, let's look at it. If we have discount account, it's going to be an discount allowed. So we don't have discount. So what you're going to do, you're going to create that account. So it's going to be our discount. So it's an expense account. It's going to be our discount. So you say discount allowed. So discount allowed is going to, should I make it a sub account? I will choose to make it a sub account. I will choose not to, so I will just leave it. Just put a description on the account here, but the account already is self-explanatory. So we just click save and close. When you click save and close, it has selected the account. Now if you don't know how to create account or which account to create, you can just to read this QuickBooks guide that is giving you here. Then you will now know the right account to use for this kind of account. But anything that has to take money away from your business, remember, it's an expense. So that's just the simple way I can put it for you. Anything that takes away money from your business is an expense. So this is a discount, and because it's taking away money from our business, it's an expense. Now another way you can see this is that, so after I'm done, I just click OK. That's why you heard that noise. So another way you can treat this is you can put it, cost of sales. When you're generating the report, you see that discount is going to appear in your cost of sales. So it's going to appear under your cost of sales. So under that place, you can now, if you want to do some adjustment, you bring it back to Excel and do the adjustment. So that is how to record payment received against an invoice. Payment received against an invoice. And I think regarding this creating sales receipt and credit memo or receipts, when to use sales receipt and invoice, I think I have already explained that. So let's see how to create sales receipt. Let's say immediate sales receipt. All right, because immediate sales receipt, so that's what we're going to be looking at. I'll just do it on this video as well, so that it will be once and for all. Now if you go back to your home, like this, you will see that again you see the sales receipt. And if you want to, because it has to do with who brings money into the business. The customers bring money into the business. So everything that has to do with bringing of money into the business is under the customer type. So the sales, so we have the sales. We have the sales receipt. You can see it here, create sales receipt, or you come to this place and you see create sales, enter sales receipt. It's still the same language, the same thing. It's just the same thing but different way of putting it. This is enter sales receipt or create sales receipt. It's still going to give you the same thing. So a customer walked into your shop. He just walked into your shop. You want to buy something, you don't know him. Of course, you know, go ahead and start asking him, what is your name, where do you live, what is your phone number? No, you don't do that. Just the same way you walk into a supermarket, you just make your purchase, make your payment via credit card or via debit card or whatever means of payment you chose to use or the supermarket offers. So they will not ask you all those details. So what the customer or what the sales rep will do is, okay, this customer bought what? So this customer bought what? He's not interested in your name. So what he needs to do is just to come to their general sales account and select, okay, the payment was via cash. Of course, you will not collect check from a one-time customer. Before you go to bank now, the check will bounce. So you don't collect check on those kind of things. Either you receive cash or you select direct transfer immediately. So the customer just walked in and say, okay, I need this. I need like let's say 2 packs of this, and I also need let's say this. Yeah, we have 0 quantity. I'm aware of that. No problem. We override all this, but don't do that on your own end, except you know what you're doing. So let's say this is 5. Okay, these are the things the customer bought. So it's a sales transaction and the person either paid cash or paid immediately. The date, of course, we have to be conscious of that. So that is just it. What you need to do at this point is just click save and close or save and new. You have entered the sales transaction. So save and close. So you can see that we have now looked at how to record. We have now treated how to record, how to raise an invoice, how to track open invoices, and how to receive payments against an invoice. And we'll also look at how to enter sales receipts. That's payments, sales made, and payment is received immediately. So that is it on how to do it in QuickBooks. The next thing we're going to look at is how to deposit money into the bank. Of course, when you make a sale, QuickBooks automatically records. When you receive money, QuickBooks automatically record the transaction under undeposited fund account. That means it's either the money is in your hand cash, or it has been made directly, or it has been transferred directly to them. But QuickBooks doesn't know that. So you are the one to now specify and say, okay, this payment we are made through bank. This payment we are made through bank. This through direct transfer. This is what we have in cash, and all sort of something like that. Now, when that is the case, we are still going to come to that. I just want to throw light. I just want to highlight some things there. We're still going to come to that in details. We're still going to see how to look at it. Now, when you look at your desktop here, you can see that this is it. This record deposit. We have 2 deposits. Remember the transactions we enter. This is a summary of what this transaction means. So for us to make sure that these things reflect our bank statement, so that during reconciliation we don't find it difficult, or we don't find it difficult to reconcile our account. We have to just take our time and classify this payment accordingly, where they went to, which account they went to. All right, so in the next video, that is what we are going to be doing, and see you in the next class.